Ladies and gentlemen, welcome to Woodburn Accountants and Advisors China webinar series on what you need to know about accounting and tax in China. You have joined us for day 3, part 3 of this webinar series, where we will be looking at how the Chinese tax system works and explaining the VAT Fapiao invoicing system. Have you started negotiating your tax system with your tax officers in China? What profit tax rates will befall you during your China journey? Have you started issuing VAT Fapiao invoices? Have you encountered a tax audit in China? Are you worried about fraud occurring within your organization? In today's webinar, we are going to be reflecting on all of these aspects in relation to China's tax system. Just as a brief update, if you've missed the previous webinars, on day 1 we were talking about how to create a China budget, what considerations you should make, tips being provided to you in relation to creating that budget. Yesterday we talked about the ins and outs of corporate banking in China, how to be efficient when operating your bank account. And if you haven't registered yet, tomorrow we will be talking about designing profit repatriation strategies and what are the actual outbound payment processes that exist when trying to do overseas transfers from China. In addition, we'll have a guest speaker on tomorrow who will also be talking about how individuals that are residing in China can also get their income out of the territory. So let's go ahead and start today's presentation. Again, if you know me, you will know that I love to interact with people, and I love to know a little bit about the background of individuals and their companies. So please do interact with me and let me know who you are if you haven't done so already this week. I usually categorize people into 3 categories: the newbies, the startups, and the experienced China hands. For me, the newbies are those of you that have found an opportunity in China, but are evaluating that opportunity right now. You're educating yourselves, you're doing some research, and you might even be in the stage of creating your budgets and your business plans. The startups in China are usually those that have already established an entity in China for a period of 1 to 3 years, or they've transacted with China for a period of 1 to 3 years. They've been so focused on their core business of either sales or sourcing or service-oriented businesses that actually they're realizing that either they have to upgrade their structure or they've got to focus more on the administrative aspects of the company and the business to make sure that it is a transparent and clean operation in order to be able to accelerate and grow in the market. And then I also categorize the experienced China hands, or sometimes the newbies are fascinated as to why there are experienced China hands that are coming on. Regulations consistently change in China. And so, you know, even myself, I've been working in China for almost 17 years. It doesn't mean that I don't need myself to gain fresh ideas, new ideas, and also learn from others on how they're doing things more efficiently. So even if you've been doing business for up to 25 years, it is always great to listen in and educate oneself. So, you know, please do interact with me again and just let me know, who are you? Are you a newbie? Just type it in, newbie, startup, experienced China hand. It gives me a bit of background about the audience that's on today. Let's see if anyone's actually typing in. Nobody. There we go. Thank you, Douglas. Thank you, Robin. All right, how this works is I'm here to educate you. So today I'm going to be educating you on tax. I'm going to be educating you on VAT. I'm going to be educating you on tax audits. I'm going to be educating you on or I'm going to give you a bit of a case study on how fraud can exist specifically with expenses, because I could then do a whole fraud episode just on all the varieties that exist. But today I'll be focusing on expenses to give you guys an understanding of how things work and how you can make things more efficient for your operation. That is my goal, is to give you the tips on how to actually operate your business. We can all read legal briefs, we can all read legislation guidelines, but ultimately what is important is that you come out of this session understanding how you can actually operate your business. So please use the next 60 minutes to your value, okay? If you do have questions, I will hang on to try and answer as many of the questions as I possibly can. I'm on a little bit of a time constraint myself, so I'm really gonna try and do this all within 60 minutes. But you know, this is not an easy topic always to explain so clearly. So if you do have specific questions to your own organization, don't hesitate to approach me. In addition to that, minor disclaimer, again, I don't own GoToWebinar. So if you do have technical problems, I am now doing a presentation. I can't help you with the technical difficulties, all right? Generally, it will stem from your end, either with the connection that you have, the bandwidth that you have, the general connectivity that you have, etc. You have an option to change from the from your Wi-Fi system to a landline telephone system. You can do that in the audio section of your control panel. Alternatively, if you get extremely frustrated, I do apologize for that. Just keep in mind, this is being recorded and a copy of the presentation will also be sent to everybody. So who am I? This is just to give a face to the voice. I know a lot of people are working from home, so I know people are also having bandwidth issues, which is why I'm not using my webcam. But I will start using that after the summer holidays when hopefully things go back to a semi-normal situation. My name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I have been in the corporate services and compliance sector in China for the last 16 years. In August, it will be my 17-year anniversary. I've been helping probably now over 500 companies with their pre-investment advisory, their market entry, their implementation, as well as their growth and acceleration in the market. And I'm also a founder of the China Roadmap program, which I will just touch on the next couple of slides. During COVID-19, I had the opportunity to write an ebook. Now I know this is now slowly starting to get a bit outdated because China is coming out of this. But for those of you that are based in Europe, the US, it's still something that is very much a crisis at the moment. So if you want to learn what I've learned through China, then feel free to just email me. I'm happy to give you a complimentary copy of the China ebook. So let me just touch a little bit on the China roadmap because I do see some faces that I haven't seen before. And if you haven't heard about this, I do have a specific webinar recording on our YouTube channel only on China roadmap. But what is it? Well, in order to succeed and grow and be profitable in China, you need to follow this China roadmap, which is a roadmap that I created based on my 16 years of experience. I only just started providing this program in January of this year. Basically, every single company that I have worked with in the last 16 years has somehow fallen on this roadmap, okay? For me, there are 3 milestones. There's evaluating the opportunity. There's then implementing a form of structure, which is usually phased. And then you've got the 3rd milestone, which is focusing on growth, looking at numbers, analysis, and decision making. Basically, every company follows this roadmap in order to succeed. The only issue is that we always incur roadblocks and obstacles along this journey. Creating this roadmap is supposed to be there for companies who want to basically have a checklist for each of the 9 superpowers I've created to make sure they are fulfilling as much or creating and fulfilling as much as they can to protect their business, to make it an efficient structure, to create system processes and operational guidelines, and to not forget anything that they have to do along the way. Going into China is not something you should do by yourself. You should be creating an ecosystem and a network of individuals that are out there to guide you and help you, either to act as mentors, friends, consultants, whomever, but people that are out there that you can actually approach if you do have any questions. So definitely keep the networking aspect on the top of your mind when you are going to China. Try and meet as many people as you possibly can. As you can see from what we're covering today, it is a lot of stuff. So don't get overwhelmed. I'm trying to give you as complete of a picture as I possibly can about Chinese accounting and tax systems. So to start off, instead of reading this page, listen to me. When you are incorporating your entity in China and it has been fully incorporated, part of the incorporation process is to do a meeting with your tax officer to introduce your company, introduce your products, your services, and what will actually be the most common transaction flows occurring. It's basically an introductory meeting. The tax officer is then going to outline to you what he believes would be the appropriate taxes, tax rates, VAT, etc., and also how he wants the financial management reports to be provided and submitted. If you're basing yourselves in one of the tier 1 cities, Shanghai, Beijing, Guangzhou, Shenzhen, as well as in some of the tier 2 cities, you will find that a lot of the ongoing communication with your tax officer can occur online, where a lot of things can be submitted online. In 2018, the government of China came out with a stimulus package for small, medium-sized enterprises in China, where in brief, what they came out with is saying that for a period of 3 years, starting from January 1st, 2019 to December 31st, 2021, there would be general tax cuts on enterprise income tax, or what we know as profits tax, okay? And this was basically to downsize the pressure that SMEs were having in the market, and try to boost a little bit of confidence, employment in these private sectors, whether it was for domestic enterprises or whether it was for foreign enterprises. So ultimately, what are the tax cuts? Well, if you are not aware, in general, the profits tax rate or enterprise income tax rate is 25%, and it is unified across China. If you are in a high-tech sector, you can do an application to become a high-tech, to be designated as a high-tech enterprise, and then the tax rate will be reduced to 15%. There are extremely strict criteria to obtain that 15%. For the SMEs, since 2019, 1st of January 2019, December 31st, 2021, if you reach a taxable income of 1 million RMB, you will have a profits tax rate of only 5%. If you reach a taxable income of up to 3 million RMB, then on the first 1 million, it's 5%, and on the second million, it is 10%. If you only reach 2 million RMB, first million 5%, second million 10%, okay? And this is going to be for a period until December 31st, 2021. Now with COVID-19, I will be very interested to see next year whether they will continue this program for the SMEs. So if you are a startup in China, obviously if you haven't been profitable, there's no profits tax rate. But the minute you start generating profit, it's not a huge impact, right? I mean, these rates are better than Hong Kong. They are probably better than the UK. They're better than the US for sure. So, you know, you're getting certain incentives here. It's very, very positive news, all right? But I wanted to start off with the profits tax rates because there is still not a lot of people are aware of this, actually. There hasn't been much, when the law came out, and when the news came out, probably around the second half of 2018, then it was a big push. But for those that are new entries, many are not aware of this. I also just want to state that you might find certain districts within certain cities that are looking to provide promotional incentives to attract investors in their district. For example, in Shanghai, there are certain tax incentives if you locate yourself in the Chunning district, where you get refunds on any profits tax rates that are initiated. This is something that's very new. You also have to be located in a specific building in order to get those types of refunds. So there are these promotions that are available. The question is always, when these incentives arrive, how long are they going to be really there for? And are there any specific criteria that you need to fulfill, like you do when you want to be designated as a high-tech enterprise? So be aware of these things. I always say tax is a single component for consideration. There are a lot of other considerations you have to make when establishing your business in China. Tax is one single component, all right? Cannot be the deciding factor. It's just one single component. Now, let's get started with VAT. By the way, if you have any questions regarding the profits tax, please do insert them into the question section of the control panel, all right? The next section is going to be talking about VAT. So for those of you that are not financial professionals, I want to explain what VAT is in China. So VAT is a sales tax. It is a major source of tax revenue for the Chinese government. And therefore, there are very strict rulings and systems in place to avoid tax avoidance, which is why I chose expenses to look at in terms of fraud, because that has a lot to do with Fapiaos and VAT invoices. And I thought it would match nicely with this topic here today. Let me also explain a little bit about how the tax bureaus work. So I'm going to use Shanghai as an example, but it is pretty much the same in every other city. So in Shanghai, when you register your company in a specific district, let's say Channing, Jing'an, Huangpu, et cetera, you are designated to work with that district tax bureau, okay? And you will get a relationship manager or a tax officer that will be appointed to your company, and that is with whom you have to develop a relationship with. Now, every single tax bureau has a certain KPI that they have to achieve in terms of tax revenue. And within Shanghai, there is a little bit of a competition between each of the tax bureaus about who earns the highest revenue, which is why you will find that there's a bit of a competitive air when people are trying to switch districts, moving from one office location to another, because the tax bureau doesn't want to lose you as their client, right? So they make that process a little bit difficult. But basically, there is this little bit of a competitive air about who at the end of a fiscal year is going to have the highest revenue within Shanghai, right? And this is also why when you want to get any tax rulings, or you want to apply for refunds or anything like this, or tax exemptions, your tax officer, but generally the tax bureau, will make the process difficult for you, because their goal is not to give you tax money back. Their goal is to make sure that they earn tax money from you. And whatever application you're going to make, they're going to want to have the documentation and evidentiary proof and the criteria fulfilled to be able to give you that refund or exemption or whatever that might be. So I've gone a bit on a sidetrack here, but I did want to give you this overview so that you have a good base understanding of how the tax bureaus work. So when you're incorporating your company and you have this first meeting with your tax officer, the tax officer will ask you, do you want to become a general VAT taxpayer, or do you want to remain as a small scale VAT taxpayer? Okay, now let me explain what the differences are between the two. The general VAT taxpayer status means that the company can reclaim or offset the VAT on purchases, sales of goods, and modern services, okay? If you want to remain as a small scale VAT taxpayer, then you cannot offset the VAT on purchases, which is called the input VAT, all right? So a lot of service-oriented companies, because they don't have a lot of purchases, the only real purchases you will have as a service-oriented company will be assets like furniture, printers, these types of accessories. That many of them remain as a small-scale VAT taxpayer because there is then a lower tax rate applicable. However, having said that, if you reach, in general, a threshold of income matching 800,000 renminbi in a fiscal year, you will be automatically upgraded to have a general VAT taxpayer status, okay? So you've got to be aware of that threshold. Now, when you have that first meeting with your tax officer, you should be asking the question, if I remain as a small scale VAT taxpayer, what will be the threshold where I then become automatically a general VAT taxpayer? If you want to be a general VAT taxpayer, you have to go through an application process. The beauty right now is that generally it takes less than a week to get an approval. Previously, it used to take around 4 to 5 weeks. So in the last few years, it's really sped up the process, and it's amazing. Keep in mind that as a general VAT taxpayer, the VAT payable is due monthly, and as a small scale VAT taxpayer, it is payable quarterly. This is the generalization. Again, this is something that you have to specifically inquire with your tax officer, because some districts may have different procedures and processes where they will say that the small scale taxpayer has to pay monthly or declare monthly as well. So what is the calculation for VAT? Very simple. It's the output VAT, what you sell, minus the input VAT, what you bought, okay? And, excuse me. And if you are a general VAT taxpayer, basically there are 2 types of VAT invoices that you can have. One is a VAT special invoice, which is what we're going to be looking a lot at today, or you can have a VAT general invoice. The VAT special invoice, this is made out by the sellers and can be verified and deducted within 180 days by the other party, okay? So keep that in mind. Now here are the VAT rates, okay? So I've given you a bit of an overview of what the rates were in 2017, what the rates were in 2018, and what they were as of Jan 1, 2019. If you are selling goods, the VAT rate is at 13%. If you are in services, the VAT rate is at 6%. And this is all if you are in the general VAT taxpayer categories. So please do keep in mind that in your business, if you are a trading entity, you might be selling goods, buying and selling goods, but you might also be providing supporting services like technical services, i.e. quality control inspections, or you might be providing logistics support where then you charge back the client, in which case, in theory, the VAT rates are very different for these 3 categories. The trade of goods is at 13%, providing technical support or any type of advisory consulting is at 6%, and logistics, you're looking also at 6%. So, that's where you really have to look at your contract terms, and the VAT rates that would then be applicable at that point. So keep these rates in mind. Again, this is a table that I am providing to you based on current rates. When you are having this first meeting with your tax officer, you do need to explain and be very clear about what you are doing in your business, because they will confirm these rates to you. Now, if they give you a different rate for something, and you know from this table that it is, I don't know, 6%, 13%, please argue back and say you don't understand, because you've learned that actually through a variety of educational channels that the rate for the trade of the sale of goods is at 13%. Why are you giving me 16%? What is the reason? Can I see a piece of paper indicating why it should be at 16% instead of 13%? Okay, be friendly. Okay, don't go into arguments or frustrations. Just have this open dialogue and communication. And obviously, the more that you know and you're knowledgeable about, the more you can then talk to your local tax officer in a smart way. So that's general VAT taxpayer. Now let's look at the definition of a small scale taxpayer. So like I said earlier, a small scale taxpayer basically cannot offset the VAT on any form of purchases, okay? So this is really more applicable to companies, again, that are more in the service-related industries where they don't have a lot of purchases. The invoices that you are going to create as a small-scale taxpayer will be the VAT general invoices, okay? And that's generally what you're going to purchase from the get-go. However, if your customer requests, which most of the time they will request, a special VAT invoice, this can also be applied for. Historically, you would have to physically go to the tax bureau and provide the request made by your customer in order to apply for it. Now, for certain industries, like the leasing and business service industry, scientific research, technical service, residential, repair, hotel, authentication and consulting, construction, manufacturing, IT, you have the ability to issue these special VAT invoices yourself, okay? But again, in order to have this ability to do it yourself, it's an application that you have to do with the tax bureau. So now that you have this knowledge, if you do want to be a small scale taxpayer and you do want to, on a regular basis or on an automated basis, issue special VAT invoices to your clients, then you should request at the tax bureau whether you can apply for this function. Do you fulfill the criteria, and can you then do it from your office versus going to the tax bureau each time? In addition, the value-added tax threshold for small businesses and sole traders has increased from 30,000 renminbi to 100,000 renminbi of revenue each month. So what this basically means is that you are exempt from paying any form of VAT if you reach a monthly revenue of 100,000 renminbi or quarterly revenue of 300,000 renminbi, okay? Again, now with this knowledge, verify that with your tax officer, okay, to make sure that it is truly applicable to you. Now, something to keep in mind since COVID-19, very important thing to mention here. If you are operating an existing entity and you are a small scale taxpayer, the VAT rate has been reduced from 3% to 1%. It is applicable till the end of this month. I believe I read an article just this week about there being an extension. I have not looked at that deep enough. But again, anything to do with COVID-19, if something is applicable to you, verify it consistently with your tax officer to make sure if you get that extension or not. Okay, don't always rely on the general legislation that is being produced, because you really have to know things that are specific to you. So because I've said that there might be an extension, go to your tax officer today, this week, and say, will this extension, I've heard that there is an extension, is it going to be applicable to me? Is it applicable in Shanghai and in the district that I'm based in? Okay, just have this open dialogue. Okay, it's really very important to have this open, friendly communication with your tax officer. So let's talk about Fapiaos and what they are, and why do they exist. So a Fapiao is a legal receipt that serves as proof of purchase for goods and services. Okay. The larger Fapiao invoicing system is an essential component to China's tax law and compliances for business. The Fapiaos are considered like gold in China. I will mention this later on, but you can only purchase them from the tax bureau. If you lose them, there is an extremely high penalty. So you do have to consider these documents as something that it doesn't just float around the office. You need to protect them. The State Administration of Tax, the SAT, they print, they distribute, and they administer the Fapiaos, okay? And then these authorities require all businesses to actually purchase the relevant Fapiaos that fit according to your status, whether you're a general VAT taxpayer or whether you're a small scale taxpayer, okay? Just the same as expenses, if you are an individual that is accumulating expenses that will be reimbursed by your company, the only way to reclaim a business expense will be through a valid Fapiao, okay? And in China, the accounting system is all based on an operation of Fapiaos. If you are doing a domestic transaction, any type of domestic business, purchasing or selling, you need to be able to either receive a Fapiao or issue a Fapiao to make that transaction true and valid. There are two major categories of Fapiaos. You've got the general VAT Fapiao and the special VAT Fapiao. And the main difference between the two is that the special VAT Fapiao can be used for tax deduction purposes, while the general VAT Fapiao cannot. This is why I said, as a small scale taxpayer, you can only issue general VAT Fapiaos. If who you are selling to is also a small scale taxpayer, then they will also only need a general VAT Fapiao because they anyhow won't be able to deduct the VAT. However, if you are selling to a general VAT taxpayer, your client will request to receive a special VAT Fapiao, which is why you have to go to the tax bureau and request to purchase the special VAT Fapiao and print it. Like I said, there are certain exceptions based on industry and sector where now you can do this within your own office space. So the special VAT Fapiao, and I'll show you a sample of this, because it is used for tax deduction purposes, it contains a lot more detailed information, including the trader's tax code, address, telephone number, bank account information, okay? In addition, the VAT Fapiao, the special VAT Fapiao is explicitly broken down into its taxable and non-taxable components, okay? While the amount on the general VAT Fapiao is usually a tax-inclusive figure. There's only one line item, okay? Now, the general VAT Fapiao, you might be asking, why is this used at all? Why don't they just use debit notes or just, Excel-based or Word document-based invoices? But in China, the general VAT Fapiao is used as evidence of payment. Is used as an evidence of payment, and that is what is then included into your financial management reports, okay? So it is a Word document or Excel produced invoice that you can only consider as a pro forma. What is actually recorded will be everything related to Fapiaos, okay? Now, on the special VAT Fapiao, which is issued, like I said, by general VAT taxpayers to customers when selling commodities or services or anything that was provided in that table that I showed you. This is what has to be on the Fapiao. The seller and the buyer's name and business address, the seller and buyer's tax reference, description of goods and services that has to match contract, bank account information of seller and buyer, sales price in renminbi, as well as the VAT calculation. So this, it looks like. This is a special VAT Fapiao. And this is all the information that is on there. There are 3 copies of each Fapiao. Okay, there's an internal copy used for the business itself. There is a customer copy, and then there is a deduction copy for the customer to use for the tax deduction. Okay, so there are 3 copies within one sheet that you are purchasing. Now let's go to actually what is considered as unbelievable information and creates mind boggles with most of the people I talk to. When you are purchasing the VAT invoices, okay, whether it's the general VAT Fapiaos or whether it is the special VAT Fapiaos, as soon as you receive your status, and here I'm going to use the example of the general VAT taxpayer status, your company can buy the VAT Fapiaos from the tax bureau. You will buy a booklet. In this booklet, there will be between 25 and 50 sheets. Each sheet has 3 copies. Each sheet is worth 10,000 renminbi. There's a value, a maximum value to each sheet, okay? The variance in the quantity of sheets that you purchase will depend on your tax officer and your tax bureau, okay? The company can obviously apply to increase the quantity of Fapiao sheets on a monthly basis, but that will depend on the types of transactions that are running through the company. You have to prove a certain level and number of transactions that are running through to show that you need to purchase more sheets on a monthly basis because you're creating more business within your organization, okay? Now, the biggest question is, so let me give you an example of the 10,000 renminbi sheets. So if you sell a service to a client and you're going to issue a general VAT Fapiao, a special VAT invoice to your customer, and the amount is 15,500 renminbi, you will be issuing 2 sheets, one for 10,000 and one for 5,500, okay? If you're going to be issuing an invoice for 36,000, you're going to have 3 sheets with 10,000 and then 1 sheet with 6,000, okay? So that's how it works in terms of the VAT Fapiaos that are then issued to your customers. Now, obviously, you want to get sheets that are a higher value, especially if you're in the trading sector and you're consulting, you know, your trade, the sale of goods is very high, right? If it's 500,000 renminbi, my God, how many booklets would you have to buy if each sheet is worth 10,000? So how the tax bureaus have done it is that if you have a consecutive period of 3 months where you've reached a revenue level of 300,000 renminbi per month, then you can increase the value of each Fapiao sheet to 100,000 renminbi. Okay, but you need to have this consecutive period. In addition to that, if you have a transaction, I don't know, like 1.2 million renminbi, and even, you know, the 100,000 sheets is just not cutting it, you can actually go to the tax bureau and apply for this specific transaction, that one special VAT Fapiao is issued for this one special transaction. Okay, so you have that ability to do that, and it makes it much faster, but you do have to go to the tax bureau to do it. Now, something to keep in mind is that every Fapiao has a number on it. It is specifically recorded, and something I will go in more detail later is you can find whether Fapiaos are fake or not fake through certain websites that you can go on where you put the number of the invoice in, okay? So you can actually do an internal check on real Fapiaos. Now, when you go through that first meeting with your tax officer and you want to go through the general VAT taxpayer status, there are two things you have to keep in mind. One, you're going to have to go through a training, and number two, you are going to have to purchase the VAT software and a VAT, I call it a VAT printer, but it's actually just very simply a printer that you have to purchase from the tax bureau. You don't have a choice around that. And you'll go through a training in terms of how to use the software, et cetera, et cetera. Now, obviously, if you hire an accountant or you use an outsourced provider, they will do all of this work for you, okay? But you've got to be aware of this additional cost that comes in through buying the printer and buying the software system. It's not exorbitant. It's just something you have to keep in mind. So what does VAT look like on trade transactions? Okay, so let's look at it from the perspective of import transactions. So you've got an overseas supplier that's selling you products into China, and your entity is purchasing those products. So on the importation, customs duty has to be paid together with the input VAT, which is calculated on the CIF value of the product, which will be between 9 and 13%. You got to go back to the table, depends on the product, plus customs duty, okay? Now, if the customer in China is a small scale taxpayer, then the VAT rate is reduced to 3%. As a trading company, you may not want to be a small scale taxpayer though, okay? You buying the goods are going to settle this payment. All right, and then upon resale of the products to the customers in China, there is going to be VAT that is added on. Domestic transactions, these are very, very straightforward. This is a very straightforward principle where basically the customers along the supply chain are going to be paying out the VAT, okay? Export transactions are actually a little bit more complicated. So upon the exportation of goods, the last owner of the goods in China can apply for a VAT rebate. Excuse me. And the amount of that VAT rebate depends on the HS code of the product. With COVID-19, there have been further increases on the VAT rebates provided. So you've got to keep your eye out on those legislations. Don't forget, when you are importing certain categories of goods, something I haven't added as a specific slide, you will have also a consumption tax. So for example, on alcohol, tobacco, cosmetics, there will be a consumption tax that is added on. Vehicles is another one. So be aware of that additional cost. If you are a service company, then it's a very similar concept as the domestic transactions. Basically, the customer is incurring the fee of the VAT. Now, the next slide for me really determines how you are physically going to operate in China, okay? So the question is, should I print out my Fapiao up front to the customer before I've received payment? Or should I just issue, I don't know, an Excel formatted or Word formatted invoice, pro forma invoice to the customer, wait that I receive payment, and then issue the Fapiao? So the reason why you should take this into consideration is because of the payment terms that you may have with your Chinese customers. All right. The minute that you issue a VAT Fapiao, you are liable to pay the VAT in that month or in the following months, depending on when that Fapiao was issued. So it might cause an imbalance in your cash flow depending on how large that invoice actually is. So what you may want to do in your startup phase, as cash flow is quite critical, is say to the client, I will issue you initially a pro forma invoice. I'm going to wait for the payment And as soon as I receive the payment, I will issue you the VAT special invoice so that you have it on hand. Okay, and obviously as soon as you issue that invoice, you've received the payment, you know, the customer is ultimately paying for it, you can pass it on. Obviously, this is depending on trade, because you're going to also offset stuff if you're a general VAT taxpayer and whatnot. But this is an option that you have. Alternatively, you might have some Chinese customers who say, no, our internal guidelines specify that we cannot make a single payment to you unless we receive the Fapiao on hand. So you might find that some very high profile customers might say that, at which point it's a negotiation point, or you just have to succumb to the fact that you've got to issue the VAT Fapiao up front. But initially, you could have both options available to you in order to help you with your cash flow. Now, when it comes to cross-border transactions, and depending where the actual service is being fulfilled, then you can also apply for VAT refunds, VAT exemptions, or you can even issue invoices with 0 VAT on them. This is why if you are offering cross-border services and the services are not actually going to be fulfilled, you are a Chinese entity. You are offering a service to an entity outside of China. You can apply for VAT exemption, VAT refund, or have a 0 VAT rate. But this is, again, an application that has to occur with the tax bureau. So I have here 2 slides. You can look at this more in detail when I send you a copy of the presentation, where you can look at if any of the services you are offering that are abroad, whether it's within this. You just have to keep in mind that in order to obtain this approval from your tax officer, who's not going to be happy because he wants the full VAT to be applicable, you need to make sure that the criteria also matches the contract that you have created with your customer. If it doesn't match in terms of business scope and whatnot, you probably won't get approved. It really has to be an apples to apples match. So in terms of VAT Fapiao compliance and management, the VAT reform in China has been something that has happened in a staged and phased out period. I can't even really remember when it started. I want to say 2010-ish. It might even have been earlier than that. So there have been a lot of changes over the years that I've been working in China in terms of VAT and the reforms that have been occurring. It is extremely important, again, that you have an open dialogue with your tax officer to know how the VAT invoices should be kept in your office in terms of compliance. If you lose VAT invoices, the penalty can be a minimum of 10,000 RMB per sheet that is lost. Okay, so this is something really not to be taken lightly. You might have some tax officers who request that you purchase an individual safe purely for the VAT invoices to be kept in, and they might even come to your office to see the safe and see how it is being utilized, who has the authority to utilize it, etc. Over the years, the tax bureaus have been trying to simplify the processes of VAT invoices. So there have been more favorable policies there for cancellation of special VAT invoices. So for example, you have a customer who by accident has misspelled or given you an account number that is slightly wrong, a digit is wrong, and you basically have to cancel that invoice. It's not valid. If there is any information that is on that invoice that is wrong, it will not be seen as a real invoice by the tax bureau. So you do have the option of canceling that. That used to be a very lengthy process at the tax bureaus where you had to physically go there to cancel it, provide an explanation, yada, yada, yada. And And now they are simplifying that, where in some cases you can even do it online, okay? There's also a use of a tax classification code for goods and services, which is making things a lot easier. However, if by mistake you use the wrong tax classification, then you have to cancel the invoice. And then obviously there's the there is now the implementation of e-invoices, which is what most restaurants are also producing now. But at the same time, you know, whenever there is some ease in terms of regulations and processes and operations, you will always find the other side of the coin where there are some stricter supervisions that occur. So for example, on the face of all general invoices, the TIN number, which is the taxpayer identification number, has to be included. If it's not included, the invoice is not valid. In addition, there have been more tax audits on VAT invoice compliance. And this is why I've added that into today's presentation as well, to look at the tax audits and how you can actually be tax audited. So let's take a look at that now. So ultimately, there are 4 scenarios in terms of tax audits. The first scenario is getting reported to the tax authorities. The second is red flags in your financial reports. The third is applying for a tax refund or tax exemption. And the fourth one, which has always occurred, is a legal entity deregistration, whether that's a rep office deregistration or a limited company liquidation, okay? So as you can imagine, getting a visit from a tax authority, it's never pleasant. In fact, most of the time, they will come to you without warning, and it will be a surprise drop off at your office. So you've got to think that even well-intentioned companies and honest businesses where you think you've done nothing wrong, you can still get penalized for unqualified Fapiaos, missing supporting documentation, simple mistakes made by employees. Obviously, if you are a foreigner and you're running a business in China, you're not going to be physically issuing VAT invoices. You're not going to be physically doing the accounting work, right? So you've got to create system processes within your organization to make sure that everything is clean and transparent, okay? Now, obviously, the best way to avoid these tax risks is to maintain a complete and accurate set of books, okay? And to do continuous health checks or internal audits to just verify what is going on within your organization, okay? So let's look at scenario 1, which is getting reported to the tax authorities. So in China, a good relationship, having guanxi, can get you a meeting with the right people, while having a bad relationship or not developing guanxi can be damaging to your business. One example of this is obviously being reported to the tax authorities with or without substantiated cause. So for example, you have decided to eliminate a supplier, you have decided to terminate your accountant, you have a competitor that just doesn't like that you're gaining market share. It could be anybody, right? It could be a business partner, a minority shareholder, it could be anyone that actually denounces you in some shape or form to the tax authorities. Now, if somebody denounces you to the tax authorities, they are obliged to take that complaint seriously, okay? And in fact, you don't even need to go with proof. You just need to make a formal denouncement or complaint. So anytime that occurs, there is a procedure that then the tax authorities have to follow, which is basically they come to your office, usually it's a surprise visit, and they will then conduct a complete and thorough tax audit of your organization. And they may not just look at that year's operation, they may look back at the previous 3 to 5 years of operation, depending on how long you have actually been established, okay? So you have to make sure that You have internal procedures within your organization that control everything in terms of contracts, invoices. And this is what I mean in my China roadmap about developing system processes. You've got to develop system processes and educate your team on what they are obliged to do. And in order to check that, you should do regular health checks and internal audits to make sure it is continuously being done and your staff are not getting lazy, okay? The next one is looking at red flags in your financial reports. So under China's golden tax system, the authorities are able to systematically and efficiently spot any potential fraudulent behavior through the financial management reports that are submitted. And these can be tax reports, financial management reports, Fapiao information, social security filings, customs clearances, registrations, and any other documents that are actually integrated into the unified system, okay? You know, even if you're looking from an individual perspective, you know, if the system recognizes a mismatch of gross salary with IIT declaration, individual income tax declaration, and hence with enterprise profits tax declaration, this will create a red flag in the tax authority systems. And obviously, if this happens increasingly often, you know, if it's just a one-off case, they might contact you, and it could just very simply been a human error. But if it continuously happens, where the tax authorities have these red flags or notifications, then they are obliged to go within your organization and again do an audit. So you've got to be prepared for that. The third scenario is obviously applying for a tax refund or a tax exemption, and this can be in the form of profits tax or VAT, okay? Now, as I mentioned earlier, no tax officer or no tax bureau likes to give money back to its clients, which is you, okay? Nobody likes to go through that process. So they're going to go through a very strict and thorough criteria format or checklist to understand why the refund has to be provided. So I'll give you a very simple example. Profits tax in China has to be paid on a quarterly basis. Fiscal year in China is January to December, so profits tax is paid for the period of Q1 in April, Q2 in July, Q3 in October. I'm hoping I'm making this right, and then Q4 in January. And then, as part of the annual compliance procedure, you have to do an annual profits tax declaration as well. In which case, there you might find that you have overpaid on profits tax. So then you have to evaluate. And obviously, the evaluation will come depending on the value that is there. If it's 100 renminbi of overpayment, I think you would probably just forget about it. If it is a couple 100,000 renminbi that can really impact your cash flow, you're probably going to say, no, I'm going to apply for a tax refund, okay? The issue is, why? Is there a couple 100,000 overpaid in tax, right? That's the question that's going to be asked, in which case they will come in for a tax audit to see why there is this and have there been mistakes that have been made, okay? So you've got to be prepared for that. And the fourth scenario is the legal entity deregistration. And so this is very simple, and this has always happened. This is absolutely nothing new. When you decide to exit the Chinese market and you want to liquidate your limited company, or you want to close down your representative office, you are required to go through a tax audit. It is extremely tedious because generally they do go and look back at between 3 to 5 years of operation, depending on how long you've been established. And they will make sure that there is no leftover tax liability owed to them. Okay, that's the main goal they want to achieve through that tax audit, is that if you are leaving the country, have you really paid all the necessary taxes that have been applicable to you? This tax audit takes about 9 to 12 months. Big pain, but it is something that you really do have to go through. So be aware of that when you're thinking about liquidating your company. So the next thing I want to look at is common expense fraud schemes in China. So What this basically means, and what I'm referring to, is that when your employees are able to be reimbursed for company expenses that they have incurred, whether it's traveling expenses for business trips, meal expenses, or you have been providing them with certain allowances, like for example, rental income, or being able to lease a car, or children's expense, children's schooling, education, etc. And you're offering these allowances because it helps to deduct expenses from their individual income tax. There's no issues with this, but you've got to make sure that you know all the tricks of the trade, and you've got to make sure you know why, or you know potentially what could happen if your employees cheat you ultimately. All right. So the first one is looking at fake Fapiaos. So a perfect example here, and this happens more than you'll realize, is that when you lease an apartment, for personal use, or a house, usually the landlord will increase the rental amount if you want a genuine and valid Fapiao. Okay. If that's coming out of your pocket, but actually, you want it to use it as a deduction for your IIT, the company should verify that the Fapiao that they're receiving is not fake. Okay. Now, a lot of people, whether they're Chinese employees or Western employees, will obtain fake Fapiaos, hoping that the company won't check them because they want to have the cheaper rent on their properties. Okay. Now, fake Fapiaos doesn't just have to happen from rental amounts. It can happen, there is a black market out there to purchase fake Fapiaos. Okay. So you've got to be aware, and I'm not even going to mention on this webinar where you can purchase them. I know where you can. I don't want to promote that, but you've got to be able to check the Fapiaos that you're receiving for your company. Okay. So I know that this will take time. It will add time to your accountant's job. If you want your outsourced provider to do those checks, it does add time to do these individual tech checks. But you don't want to get caught in a situation where you have a tax audit and all of a sudden, your tax officer is going through the books, or that even your auditor at the end of the year is going through your books and finds these fake Fapiaos. So there are now verification websites that are issued by local Chinese tax authorities where you can check the authenticity of the Fapiaos within a couple of seconds by entering the Fapiao code associated with the merchant and the serial number that is on the Fapiao as well. I recommend everyone to do that. Okay, you don't want to get into a difficult situation. Then you've got issues of different expenses by nature. So you've got employees that may spend money on items other than food and drinks in restaurants, such as tobacco, alcohol, gift cards, dining coupons, that they generally utilize to gift to clients, business partners, government officials, etc. And in order to get reimbursed by the company, and in order for the company to not find out that they've been doing this, they will then give food and drink Fapiaos. Okay. Now, if you are a UK or US company, gifting anything is considered as bribery. So you want to be very sure that the expenses that are coming in from your employees are the true and valid expenses by nature. Okay. You don't want to get into difficult situations. Inflated expenses. So this is actually where, for example, you will have an employee that goes to a restaurant, only spends 100 RMB on the meal, but then asks the restaurant to issue a Fapiao of up to 150 RMB. Now, I know that this is then extremely, extremely difficult to check. However, you can also designate certain restaurants where your employees can go for meals, where you then know the price ranges. Now, again, we're talking then about mothering and fathering your employees and telling them where they can and cannot go. But if you're a relatively large organization and you've got over 100 and 150 employees, having inflated expenses, it's not fair to the company. Okay. And especially when you're looking at COVID-19 and everyone is tight and strapped for cash to pay off expenses, you really want to make sure that the expenses that are being generated in terms of value are true and real. Okay. The next one is canceled expenses. So this is basically where, again, it's kind of like a form of embezzlement, where the employee can go out to a restaurant, place an order for many, many dishes. They ask the restaurant's servers to print out a listing of all the dishes being ordered, swipe their cards to produce the POS slips, and then the restaurant issues the fabricated Fapiaos. Why would restaurants do this? Well, usually servers would get maybe, you know, a little bit of cash as a kickback in order to be able to do this. Now, you might think that this is like, I mean, people are going to the extreme. I mean, going to a server and saying, okay, I'm ordering 10 dishes, please print out the listing of all those dishes, and then please print out the POS slips for those dishes, and then cancel the dishes and order something much less. But I'm adding it in here because people actually do this, okay? And that's how they get higher reimbursements. So I do want you to be aware that this can occur. Then you also have expense splits, where, for example, you'll have two employees go out for lunch together. They are actually going to a Chinese restaurant, so they're sharing the dishes, but ultimately each employee gets a listing of all the same dishes and also a POS slip individually for those dishes. Happens quite often again. Now, again, I'm going into a lot of nitty-gritty detail, but if you've got a large organization and this happens every day, imagine how much you're actually wasting on reimbursement to employees, okay? Then you've also got substituted Fapiaos. Now, in some instances, this will have to occur. So to give you an example, you might have employees who use the motorcycle services instead of using a formal mode of transportation, where then that motorcyclist is not going to issue a Fapiao, but the employee is still giving 2 kwai or 5 kwai for that motorcycle ride. So either you have a very clear guideline to your employees saying you can't use these motorcycle guides if you're going somewhere, and you know, even if you're in a rush, take the metro, take a taxi, take a bus, so you have a formal Fapiao. There might be certain situations where you're out in the countryside visiting a customer or whatever it might be, and again, you're taking a mode of transportation, or you're purchasing a meal where again you don't get Fapiaos, in which case you have to get substituted Fapiaos to cover that expense. I allow this as long as I'm being told about it, and I want to know it up front. I am not a large organization, so I do look thoroughly at each of my employees' expenses, and we do look at it together. And as I'm doing this on a month-to-month basis, and I allocate time in my agenda to do it, my staff have become used to it. It's become a habit, and they know not to lie to me, because they know I can find things out. So it is important to create internal guidelines again to promote transparency and communication with the employees, that if they do have to substitute Fapiaos, that you're just aware of it, okay? But you've got to be familiar with all of this. Then obviously you've got fabricated business-related expenses, where, you know, you have an employee going out with his family, he takes the Fapiao and he suddenly books that as a meal expense, saying that it was with a customer, but it never actually, that meeting never actually occurred. At times like that, you might just want to call the customer and just say, you know, you do random inspections, and you just say, how was the lunch with my employee? How did everything turn out? You know, at one point you just want to maintain the relationship, but at the other point you also just want to make sure things have actually happened. So be aware of fabricated business-related expenses. And then obviously you have the issue of expenses not self-initiated. So for example, you've got events that were initiated by local government officers or business partners who have asked the employee to pay the bill for that event, okay? So the employee probably wasn't even at the event, but because it's such a high level customer or government official who has asked him, pay me back for this expense, they do it because they want to maintain the guanxi and they want to maintain the relationship. I know it's not fair, but that expense is then put away onto the company. So you've got to be aware of these things. Like I said, open communication. So how can you solve all of these things? The first one for me is the most critical, okay? You've got to implement proactive expense reviews. Don't just glance over them. Look at them in detail. We're now in COVID-19 where everyone is suffering on cash flow. So if you have an employee and suddenly, his bill has skyrocketed for reimbursement, you've got to ask why. You've got to go into details. And I just want to say, the minute that you use reviews and you do it on a monthly basis, it becomes a habit. It goes to audit your diary, but it just happens. And then you're not being cheated. Senior manager, but you've got to have these guidelines in place. That job can maybe go, you can delegate it. Ladies and gentlemen, apologies. I got kicked off from my internet connection. I think everybody can hear me again now. Sorry for the delay. So again, I just wanted to go back to what I was saying about the enhanced management of restaurants, because I think that was the point where I got lost. You can create in your employee handbook a list of restaurants that are only utilized for business dinners or utilized for business lunches. And then you can also give a meal quota, like a meal subsidy per meal for each employee as well, to control those types of things. And if you know the restaurant area around your office, you might gain some insight into how much those things actually cost. The next point or practical solution that you can achieve is adopting automated expense reviews. What this basically means is that you can use apps nowadays where expenses are uploaded, and these apps can actually then create warning signs or red flags for you in case there is an overuse of expenses or something that isn't matching based on current trend over the months. Then you've obviously got to have a maintain a defined and enforceable policy. Having a written expense policy, nothing beats that, where you outline explicitly what are permitted as expenses and what are the allowances that are being provided. There should be a zero tolerance policy, and that should also then be in the employee handbook that you create for your employees. And last but not least, you also have to look at collateral risks, okay? If companies in China are subject to foreign legislation like the UK Bribery Act or the FCPA, then you don't draw from foreign enforcement agencies to do parallel investigations. So you want to be very careful on what you're actually doing in the Chinese market in this regard. I want to conclude with today's session on just a couple of tips. Ultimately, you've got to talk to your tax officer and you've got to have open communication, all right? You yourself, out of curiosity, just go meet your tax officer and go visit the tax bureaus. Have an open dialogue, talk about your transactions, talk about your future plans, what are the sorts of transactions you're expecting. You've got to have a clear compliance procedure, a system process internally about how the Fapiaos are being treated, who is managing them, who is purchasing them, where are they being stored in the office. And obviously be precise with the data and the information on the invoices. You don't want mistakes to happen, although let's face it, there is sometimes human error that you have to just deal with, but be aware of that aspect. So just how we can help you. I think the biggest aspects in terms of how we can help you from this presentation is that we can help with health check services. We can also do internal audits or due diligences. We can also, help with the accounting and whatnot and set up the system processes. If you want more details on that, do let me know. Like I said in my previous presentations from this week, if you want to have a no strings attached meeting with me, you are more than welcome to. You can actually set up a meeting directly in my diary. I'm giving the link in the chat section of this control panel. If you want to connect with me on WeChat, you can do so. I'm going to give you my ID as well. And if you just want to email me, I'll also add my email address in here. So I'm going to leave the floor to some questions. Douglas was asking, is the 800,000 renminbi threshold on income or revenue? It's on the 800,000 is on revenues, Douglas. Robin is asking, do you need Fapiao on exports and on intergroup sales? So on exports, you're not going to issue a Fapiao to your customer in Europe, in the US, in the UK, in Australia, okay? You just issue a normal invoice, however format you will utilize, and then you go to the tax bureau for the VAT refund. For intergroup sales, that depends. Are the intergroup sales domestic? If they are, then there will be Fapiaos. If the intergroup sales are cross-border transactions, then no, there's going to be no VAT. Andrew is asking, why do the Chinese refer to VAT on export business invoices when it's in fact a surcharge or business tax? It's not a business tax, Andrew. Business tax is a term that was used a long time ago for service-oriented industries. So I'm not quite clear on what you mean by the business tax or the surcharge when you're exporting. But when you are exporting, you're not actually issuing a VAT Fapiao. Because again, your customer who's abroad, they don't use the VAT Fapiao. You just issue a regular invoice. But I'd be happy to go into more detail with you if you would like. Those are all the questions that have popped up. Let me know if you've got any others. Like I said, you're more than welcome to set up a meeting with me. Alternatively, tomorrow we're going to be talking about designing corporate profit repatriation strategies, and I'll also be having a guest online who'll be talking from an individual's perspectives. If you've got any questions, again, please let me know. Unfortunately, I cannot stay online because I've got to dash off with one of my kids, but I'd be very happy to have meetings with you individually if you would like. Thank you again for joining me, and I look forward to seeing you all again very, very soon. Take care and goodbye.